Credit infrastructure is one of the most important tools that we consider from the World Bank that promotes that possibility of credit being granted in a responsible manner with the right fundamentals and basis. And there are three main pillars that we work on credit infrastructure. One is the main topic of this conference, which is credit information. And the main barrier that credit information intends to tackle is the information asymmetry. The fact that you don't know me, so why should you give me credit? So the more information that you can get at the lower cost will make credit available at the right price. Then there is secure transactions and collateral registries. There has been for the longest time a mismatch of what banks and financial institutions consider collateral worthy and what particularly MSMEs and lower income entrepreneurs have as assets to provide as collateral. And then there is the insolvency and the debt resolution regimes, where if we don't pay attention, distressed companies disappear. And what we want is for them to have a continuous and sustainable life. So let's start with the scope of the credit landscape in sub-Saharan Africa. You know that the doing business is one of the most important tools for measuring the ease of doing business, and credit infrastructure has two main components or indicators within this tool. And sub-Saharan Africa is still very low in the measurement or in the rating of these indicators. One is getting credit, and the other is resolving insolvency. But there has been a lot of progress still. Let's talk about credit information. This is my favorite topic, really. Why does it matter? We talk about these reducing information asymmetries. But then also it contributes to implement borrowers' discipline. Them knowing that the information is going to make available, then they will make better use of their tools and pay in time. And this reduces also over-indebtedness. It should reduce the cost of lending because having information available without having to go and knock on doors and trying to get the data themselves will improve that access to credit at lower cost. And then also that amount of data that talks about the performance of credit in a whole country gives the regulator tools to track that and to make decisions and make policies. And then, of course, this information asymmetry can take us to what the credit officers face every day. There are two possible errors that they can make in every credit decision that they have to make every day. The first one is that they could approve a bad loan. By doing that, there is a higher chance of over-indebtedness, higher NPLs, and obviously then the cost of credit will increase. The other mistake that they can make that will worry more their shareholders is to deny good credit. And then there is less credit to consumers, but then also less profit to their wallets. Depth of credit information ranking from the doing business consists of 8 basic indicators. There used to be 6, there are 2 new ones. One is to access online credit information and to have credit scoring. And this is what Sub-Saharan Africa and the various countries rate in the doing business. There are about 48 countries from Sub-Saharan Africa rated during Doing Business 2020. Around 8 have the full 8 points or indicators. Then about 9 have 6, and like that. And there are still a few that do not rank. And not necessarily because they do not have a proper credit information in place, but because there is this threshold of at least 5% of the adult population that have to be part of the database of these credit bureaus. So how was it 5 years ago? You can see that there has been important improvements in establishing the frameworks, the legal frameworks, and the reforms needed to reach to higher levels of these indicators. And look at the 2010. You see that in 2010, there are some countries that get some ranking, but remember that from 2013, I think, forward, it was eliminated. So anyone that did not get the 5% coverage of the adult population did not get any points for the doing business. So we can really see or say that there is starting to be a mature market that is ready to promote credit through the use of the tools that are made available through credit information. Let's look at the other important indicator for the doing business under the depth of credit, which is the coverage of the information in the bureaus. We still have a lot of work to do in this. The coverage in 2020 did increase and improve from what it was in 2015 and in 2010, but then there is a lot of work to do that. And there are challenges that we still need to address. And these challenges, some of these challenges, we can classify it as operational or regulatory. So one that is super important, that is, I think, consistently a challenge in most of the countries in the continent, is the need to have a unique identifier. Why is that? Because if I have access to different IDs, my driver's license, passport, national ID, and I can get a loan with each one of those, who is going to really know what the whole picture of my credit is? So this is something that should be resolved. Then this leads to over-indebtedness and higher NPLs. Another challenge is data. There is so much data out there. There is the traditional data that credit bureaus collect from financial institutions that talk about the historical payments that we make when we actually had access to credit. But what about those that do not have access to credit yet? There should be data that can tell us the story so that we can understand and we can assess them and give them credit. But that data is fragmented, is everywhere, is digital, is in the air, is in our mobiles. How can we, in a structured manner, have access to that information to make sense out of it? We are in the age of technology, in digital, so this is one of the opportunities that we have now to work on that. And if we need a battery for this? Because I don't know it by heart. And the other challenge is to make this work. Data has to be complete and has to be timely, because if I have information on you from 6 months back or a year, then I'm not really necessarily making the best decision I can have. And then the lack of digitized data, everything about technology is having access to information that is leaving digital trails. So if there is no use of these digital platforms, then we cannot have access to that information. So for the alternative data, which is the main topic for us today, the ICCR in 2017 was tasked by the GPFI, by the G20, to work on the policies that would promote the use of this information. And this is based on this premise, that MSMEs and individuals are continuously generating vast amounts of data that leave a digital trace. So if we can have access to that trail and make sense of it, then there is the next evolution. There is the new opportunities for making great strides towards really providing access to that segment of the population that we have been trying to reach for so many times in so many ways, and it's still full of gaps. And then also that alternative data, because it provides so rich information, and it's not only on credit, even talks about cash flows, it can really give us the tools to not only measure the willingness to pay, which has been the traditional way where we use credit information, but also the capacity to pay. Because if you can have access to the cash flows of the businesses and individuals, then you can do that exercise as well with the same tool. So these policy recommendations from this work that the ICCR had were divided within 4 categories: improving availability and accuracy of information, expanding credit information sharing, enabling responsible cross-border data, and this is going to be the next topic that you will be hearing a lot about, and of course balancing integrity and innovation, and I guess that also addresses the predatory lending that has been talked here about. And the ones that I just highlighted are probably the most important ones, or at least the ones that can generate faster results. The adoption of the unique identifier, or some manner of uniquely identifying the individuals and the businesses, is of utmost importance. If there is not a way of doing that, there will always be a higher risk of over-indebtedness, of higher NPLs, and of the deterioration of the portfolios. Then, promoting the use of digital platforms. And I want to call your attention that these are policies that were drafted by regulators with contributions with the private sector, but it is the regulators that are represented or representing many countries around the world that are saying that we should promote these digital platforms. We should promote the SMEs using them, running their accountings in the cloud, running their inventory, because that information will be used for their own benefit.